Hi, I'm Vivek and I'm gonna tell you why CTRIP is overvalued. With a warranted price of around $38, this stock has a potential downside of 20% and my recommendation is to sell it. CTRIP is a market leading online travel agency in China with combined market share of over 50% in accommodation, reservation, transportation, ticketing, package touring and corporate travel segments. Recently, CTRIP has been trying to expand its geographical footprint to capture greater market share of increasing outbound Chinese tourist market. On analyzing HOLT CFROI for CTRIP, we can clearly see the evidence of fade, with CFROI peaking in 2009 and gradually has been coming down. Similarly, sales growth can also be seen maturing. This is also evident of increasing competition in the market. The margins have come down during the last 3 years primarily because of increased spending on product development and sales and marketing. The asset turnover has also come down in the last few years. Historically, asset turnover of CTRIP has been far below its global peers. This tells us that management has not done a very good job of creating shareholder value by efficiently utilizing the assets and creating a learning curve to increase operational efficiency. The best case assumes sales will continue to grow as per market growth potential. Company will improve its margins by improving operational efficiencies. Ever-increasing competition and historical track record of CTRIP made me assume that asset turnover would remain between 0.3 and 0.4. With the tax rate of 30%, I got a valuation which is close to the fair value but still has a downside of 2%. This industry is facing a fierce competition and price war is evident. There is a potential for new entrants to disrupt the segments in which CTRIP operates. CTRIP does not employ any sort of currency hedge. Any future depreciation in Chinese renminbi will directly impact the cash flows in USD. Though I am a believer in long-term transition of China from manufacturing to consumer economy, some short-term bumpy rides in this transition cannot be ruled out. Taking these risks into account, I reduced the projected revenue growth in 2020 to 6% and reduced EBITDA margins by modest 2%. This produced a significant downside of 20% in this stock with warranted price of $38.57. The default HOLT valuation model is even more pessimistic on this stock with potential downside of 52%. On comparing CTRIP with Priceline with high EBITDA margins and asset turnover ratio, I could find no justification for price to earning multiple of over 57 for CTRIP. I believe CTRIP is a momentum trap and with the warranted price of $38.57 has a potential downside of 20%. So my recommendation is to stay away from the stock or sell it.